And it does not feel like long ago at all that we were doing videos back here in terms of ADA charts, and we were just enjoying so many gains and even an all-time high. Things were going parabolic. It was not long ago that that was happening. But if we're going to enjoy those gains, if we're going to enjoy the payoff and bull markets, we have to just live through the valleys and the pain and bear markets. And so it is kind of true for life. And so here we are on the charts. Here we are within these cycles. I've been doing these videos for years and years and years, tracking these cycles, tracking this story. And one thing is true when it comes to bull market highs or bear market lows, I think a plan is needed. And we are all in completely different scenarios and situations in our lives, and no one plan fits all. So everything I'm going to talk about in terms of ADA accumulation and my approach here, it's me. This is how I see things. This is how I approach the markets. That's all it is. And I'm really documenting my journey here. So I want to talk about with where we are on this weekly chart for Cardano and what might be ahead for potentially more downside for ADA and the crypto markets. I want to talk about my approach to this chart that you see here. Now, on the daily chart, we've already identified this kind of lower low, lower high falling channel that Cardano is in. And we've also already identified kind of these breakout potential to the upside and to the downside. These are just always two constants. There's always potential for a breakout to the upside or a break to the downside. We just have to accept that. And we have to accept probably more strongly that nobody knows what's going to happen. This video and everything I'm going to discuss here probably has more to do with if ADA falls lower into this bottom range area. And this really is truly the bottom range that I have pretty much identified for ADA at this point. Things could get worse. Crypto could fail. I said it in the last bull market. I'll say it in bear markets. Crypto could fail. Crypto could go to zero. When I'm making these decisions, I am absolutely considering the extreme in both sides, meaning crypto could go to zero or crypto could just absolutely moon and go crazy. And I'm always considering those things. But this for me is the bottom range. And the reason I want to do this video is to kind of explain why and also tell you my approach to that range. But the reason why is because we've identified in Bitcoin charts, namely this 786 retracement. I don't want to talk too much about this, but the 786 retracement is basically this retracement area that Bitcoin falls back to in these bear markets and falls below. Now, I know we're talking about Cardano ADA, and we could be talking about other altcoins, but for me, it always comes back to the Bitcoin chart. Not necessarily for Bitcoin accumulation, but Bitcoin has the most data in terms of cycles. And when we're talking about and trying to identify cycle trends and momentum shifts in and out of cycles, Bitcoin is just the best. It has the most data. It has the most guidance for us. So we talked about this bottom range for Bitcoin, and the 786 is an area that we've been in previous cycles. There's 2018 bear market low falling and bottoming out below the yellow line, the 786. And we took the previous cycles as it did that, and we kind of identified this average downside potential of 35% for Bitcoin. It's around $11,000 to $12,000 Bitcoin. So Bitcoin's at the 786 line right now. Interestingly enough, on this macro chart for ADA that we've identified, ADA is just above its own little lower trend line. Has nothing to do really with a 786 line, but it's a macro trend line, and it kind of has this breakout target to around 17 cents. Now, the reason why I think this coincides so nicely with Bitcoin and really helps me in my accumulation plan of ADA is this. If we look at the breakout target right now, the breakout target is right around 40 to 41 cents or so, or 40 to 41% or so to the downside. If ADA falls, if crypto falls, and we're actually going to talk about if it doesn't fall as well, because that is a big part of my accumulation plan. If it doesn't break down, it actually breaks up. I want to discuss that in a minute. But so we have the 35% potential to the downside on the Bitcoin chart, and there it is. There are the ranges that Bitcoin could fall into as it's kind of capitulating and falling. And so when we go to the ADA charts, and we can go actually to the daily, we can start seeing, well, that's a 35% range over there on Bitcoin, and over here on ADA is a 40% range. Now, mind you, even actually most recently in these recent falls that we've been seeing in crypto, ADA has not done terribly against Bitcoin. It really has not. So ADA and altcoins could be a little bit more volatile to the downside if Bitcoin were to see a 35% move to the downside or even a 10% move. Altcoins would follow it, right? But maybe a little bit more volatile, maybe not as volatile. Something like Matic might outperform Bitcoin. We don't know. But this is the range for me. So when we get to this range, in my mind, and I think my Bitcoin chart really does a good job kind of visualizing how I go about this. It's not like there's no math really behind this. It's very visual and it's a very mental thing. It's a personal thing. It's an instinctual thing for me. But this is the Bitcoin chart, these ranges that you see. These are kind of like these areas where, okay, it's falling below the 786 line over here on Bitcoin. Maybe buy a little crypto. It's falling even more, this second range. And then it's this third range is like maybe the heavy buy zone for me. It's a mental game. It's a mental approach for me. So the same is true over here on Cardano. If Cardano starts falling below this trend line, I could see myself, in that 25 to 30 cent range, start maybe just buying a little. And this would be something where I'm kind of like at the same time where I'm buying, I'm knowing what's going on the charts. And I know that at any time, there could just be this pullback to the trend line, right? So maybe buying a little, I know there could be a pullback. And then at this point, it's kind of like, all right, well, we bought a little in this range down here. And then from a technical perspective, there's potential room for a pullback. And maybe it doesn't come until ADA hits, 23 cents. But I'd be watching after buying a little. If there were a pullback to the trend line, what happens at that moment? Does ADA break back into the trend line? And by no means the time frame that I'm putting here is anything in particular. This is completely speculative, but just really to paint a picture. So ADA falls into my first buy range. Maybe we get a pullback, maybe we don't. But if we get the pullback, what happens here at this trend line? Is there resistance? Does ADA start falling again? Because at that point, potentially ADA could fall into kind of this next buy range. So maybe going down to 20 cents, that could be that next buy range for me. And maybe it happens sooner, right, without a pullback, or maybe it happens after a pullback. But that 20 cent to 25 cent range could be an accumulation area where maybe I'm getting even a little bit more bullish than I already am. And if you didn't watch the intro, the first part of this video, I'm getting bullish in terms of accumulation goes. In terms of what accumulation looks like, because the fear is just getting so strong. The engagement is getting so low on social media. People are leaving. And this is just, it's so reminiscent of 2018, everybody. And I'm being very mindful of that. I'm taking it as a data point, and I'm really trying to just push against and make decisions against what emotion might be telling us. There's fear, there's uncertainty. But anytime we're in these environments, COVID wasn't that long ago. All the markets were tanking, but look at the opportunity. People thought we would never get out of that, and everything exploded out of that. Now, we have to let the macroeconomic picture take place, right? And we have to let that kind of slowly turn around. But I really am convinced, and I really think that markets are going to turn around sooner than the economy itself, and even than the headlines might lead us to think. So there's kind of these two areas, first falling below to 25 cents or so, and then down to 20 cents, and then just falling into that last area. I mean, at the end of the day, it's like how much fiat is left over to keep accumulating, right? And we all are in different situations. We all have to just work the best we can and allocate the best we can with what we have. And it's an ongoing thing. Things can change, especially if you're an entrepreneur out there. You know how sometimes it's kind of feast or famine. In the recruiting business, sometimes things pick up like crazy and sometimes things slow down like crazy. So it really is dependent on your specific situation. And for me, the same is true. It's like when we get to these certain areas, what is my situation looking like? Where am I comfortable? Because at the end of the day, when I'm buying or accumulating any ADA, I just want to feel comfortable with it. Meaning, in the scenario that I'm picturing at that moment, if I buy more ADA and I envision crypto fails and goes to zero, am I okay with that? That's a question I ask myself. Am I okay with that buy? And the same thing, am I okay with how much ADA I have now if crypto just goes crazy and goes parabolic? These are two questions, the main questions I ask myself because I want to be comfortable in that moment. So there's kind of three ranges, I would say, and it's not exact. I don't have buys set up in each range. I'm just playing it by ear. I'm watching it. I'm seeing how markets are. I'm seeing kind of when it happens. That's a big deal as well. And how it coincides with just the headlines and what's going on with interest rates and what's going on with the Fed and how they sound. So going to continue watching all of these things, but that's my approach right now to ADA on these charts. I will say I didn't think, way earlier on in this market, as we zoom out on this chart, we always knew bear markets come and we're always in anticipation of it. I didn't think markets would kind of struggle in the way that they have. And that's probably a miscalculation on my part, because if you just simply zoom out and look at the data, we are in this space where we kind of want things fast. And if you just zoom out and you look from the last bull market high, even for ADA in January of 2018, before it actually kind of decided to really bottom and kind of start moving out of the bear market, and this was before COVID, who knows what this chart would look like otherwise, but ADA was finally kind of making that move, and it was starting to kind of go up, and this could have been probably the slow exit of the bear market into the bull market, right? But that took like 728 days from the bull market high to that time. And yes, we had a nice little bear market rally or post capitulation rally, and every cycle is not going to deliver the same type of thing. We got the rally, and then things started trickling sideways again, and you know how the market was. But 728 days before that really started happening. For context to where we are right now, we are right around 469 days from the all-time high, right? So if we stretch this out to 728 days, we get kind of more context and perspective. Like, things are down. There's still more room to the downside that would even bring us to reflect the last bear market. So we have a cushion to the downside, but time-wise, we're not there just yet. And there could be more sideways. There could be more downside. There could be a ton of more volatility, and it would be normal. 728 days takes us to August of 2023. Not saying it's going to take until August to really show any bullish momentum or for the bulls to even make an entrance or an appearance. But what I am saying is we should give this gap of time that's right here on the chart some breathing room to do its thing. And all the while, that will help us also be patient with just the economy and what's going on with inflation coming back down. Just we have a nice cushion of time right now, as well as to the downside. We have all of this cushion. We just need to be patient. And that's what I tell myself. I know we want just these bull market environments all the time, but we have to remember these bear market environments that we have to survive. That's exactly what delivers the bull markets and the all-time highs and the gains and the forward momentum of this space. So we have to survive this stuff, whether it's downside in price or just time. We have to allow those things to play out. So that's kind of what I'm looking at on ADA right now, and just kind of my view on the markets, how I'm seeing things, and kind of my approach to what's going on right now. Let me know your approach. Let me know how you're doing out there. Comment below. I hope you're well. I'll see you all in the next video. God bless.